Hello and welcome to Crux Investor. We caught up with Luke Alexander today of Nucor Gold. Spoke to them back in February, and he brings us today to talk about his PEA results. Some pretty big numbers in there. They're quite impressed. We also look at the plan, how to take this thing forward. If you want our thoughts and opinions on that conversation, their plan, and the company itself, you can find that at cruxinvestor.com. And if you want to see precisely what we talked about, take a look in the description below. Luke, how are you, sir?
I'm doing great. How about yourself?
Not too bad, not too bad. When did we speak? February? Mid-February? Something like that. So long ago.
Yeah, sounds about right. Would have been mid-February.
How you been keeping?
Yeah, I've been doing great. I mean, it's starting to get nice here in Vancouver, and ultimately, feels like summer is just around the corner.
Sweet, good. You've also been quite busy. I saw a press release this week. Really intrigued. Was it what you were expecting?
It actually beat my expectations. I mean, looking at the economics of the PEA that we just released, I mean, it came in $212 million NPV at a $1,650 gold price, 42% IRR with a very short payback period. So it kind of beat what my expectations were. And ultimately, I think it beat what the market's expectations were. I mean, if I look at the covering analysts that we've currently got, Three of the five have just put out notes increasing their target prices. One hasn't released a note yet, and the other one reiterated a strong buy on the company. So I'm personally very pleased with the results, but every CEO who comes on the show is going to tell you that it's the best study ever. And I think ultimately the market dictates whether it's a good study or not. And we saw that with the stock up 8% yesterday on the back of the release on very strong volume. And then there's been good follow through again today with almost 750,000 shares trading 2.5 hours into the session, the stock up, and a lot of blocks trading. And those blocks trading ultimately say to me that there's a bunch of institutional investors who are stepping in on the back of this PEA. They recognize the fundamental value that creates for the company, and ultimately the fact that the company at this stage is undervalued relative to the study that we put out. So yeah, very pleased with the results, and great to see that the market recognizes the value in it as well.
I mean, those are quite good numbers, Luke, but at today's prices, it looks exceptional. You must be pleased.
Yeah, extremely pleased. I mean, if we look at the PEA at an $1,850 gold price, and if you look at the press release, we've added sensitivities in there so you can see the numbers. But at $1,850, we're looking at an after-tax NPV of $302 million. That gives you a 54% IRR and an under 2-year payback. So very good economics from that perspective. And ultimately, if you look at the initial CapEx, we're talking about $97 million, which is obviously one of the real advantages of these heap leach projects is that they're low CapEx. And that low CapEx obviously is what creates some very good torque to the gold price. And you can see that, you've added about $90 million of NPV by going from 1650 to 1850 gold. So very good sensitivity from that perspective. And also from a CapEx and initial capital perspective, we don't have a lot of sensitivity to that. And in our press release, if anyone wants to look in more detail, we've added a chart there that gives you a really good feel for that.
Yeah, I think it has. I think the market reaction is very positive, but I think also to remind people it's very low capex, under $100 million. That's interesting. But now what?
So now, I mean, ultimately, this is a good data point in time, and obviously very robust economics that people can update models and come up with their own kind of views in terms of re-rating potential for the company. Now the big focus remains, which is what the big part of our focus has always been, which is exploration. So if we look at the PEA that we just released, we only included about 20,000 meters of drilling within that PEA. We were also able to get a very small resource update done within that PEA, added a couple 100,000 ounces to our overall resource. But we've got another 46,000 meters of drilling. We've released about 20,000 of those meters. So a lot of the press releases that you've seen over the last number of months are not included in the updated resource, as well as an additional 26,000 meters of drilling, which we'll release over the next coming months as we continue to drill across the property. So exploration remains the big focus for the company. And I think last time I was on the show, I kind of highlighted that, our goal is ultimately to build this to a 4 or 5 million ounce plus resource. And that's how we think will create the most value for shareholders. But what I would have also said at the time is, by continuing to update these economic studies as we go, that creates a fundamental underpinning of value that ultimately, investors in the market can get real comfort with, and give the market the ability to re-rate the company based on those economic studies. So I think that's exactly what we've delivered with this PEA. But let's not lose focus of the fact that resource growth is where we're going to continue to build value. And then as we build that resource, we'll continue to update these studies to create further underpinning of value.
Okay. Is it as easy as you've done 1/3 of your drilling, 2/3 to go? We just multiply the 1.4 million ounces. We just add another, 2.8 million ounces to that number. There you go, 4 million. Is it going to be that simple, is it?
Well, so not that simple. So we do have historical drilling that feeds that resource. So it's obviously a combination of the historical drilling that we did, and we had a resource that we had put out in September of last year. So we've added 200,000 ounces to that resource that we put out last year. So it's a combination. It's not as simple as that. But what our view is that ultimately a lot of the drilling that we have been doing has been resource expansion. And if anyone read our news release last week on Boeing, that was a significant release in the sense that if you look at the strike length of the in-pit resource that we've got at Boeing, we stepped out by about 1.4 kilometers. So increasing the overall mineralized area by about 50%. So that's the kind of drilling that will ultimately feed into our resource as we go. And our view is that, on the back of this 66,000 meter drill program, we'll obviously be able to significantly grow the resource from here.
Okay, that's where I was getting to. Okay, because I didn't want people to think that you're taking shortcuts or making big bold statements, because you've got the easier answers because you had this Stark, you've done some drilling, you've got the budget to deliver another 46,000 ounces or so. But there's more to it than that to get to 4 million ounces. Mining's not easy. And you're not suggesting it is.
Absolutely. I mean, it takes time, and when I talk about 4 or 5 million ounces, that will take a few years to hopefully get to that point. But let's say, to kind of break it down simplistically, if we look at our 1.4 million ounces, what feeds that 1.4 million ounces is about 75,000 meters of RC and diamond drilling. So you can kind of extrapolate how you want on that. So, will it take another 75,000 meters to double that? And then, beyond that, another 75,000 meters starts to push you into that kind of mid 3 million range. So that's the way I would look at it. The nice thing is that because we have done so much work on this project, we've now got 4 deposits. We added Quachikrum, which is our maiden resource there, and that's on the success of the drilling that we've been having. Is that we view it as lower risk exploration in the sense that a lot of the resource that we're adding is by stepping out at our existing deposits where we've got very good understanding of the geology. And then the other part of the drill program that I'll just kind of highlight is that we are also going to be drilling some new targets for the first time ever. So I've talked about Sium South in the past. It's right down at the southern end of our property. It's our largest anomaly. We've just completed a 2-kilometer trenching program down there. We'll drill that for the first time ever, as well as we're going back up to Arati, which is way up at the northern end of our property. We've got 10 historical holes up there. We're going back there to obviously do some follow-up drilling. And, with that, we'll over time look to bring that in as potentially a 5th or a 6th resource area to complement our existing resource areas where we continue to grow ounces. And that's one of the key things with our existing resource areas is all of them remain open along strike as well as at depth. And maybe on the at depth piece, if we look at the balance of the 28,000 meters of drilling that we're going to release over the next number of months, about 18,000 of those meters will be focused on diamond drilling. So one of the things we talked about in the past is ultimately these greenstone hosted deposits along the Sefwi Bibiani belt, including Kinross's Chirano to the north of us and Ahafo, one of Newmont's 2 producing mines in country to the north of that. Where they really increase in grade and grow in size is as you start to drill into that fresh rock and get into the sulfide. So we've started to have some nice intercepts with the deepest holes that we've ever drilled with the RC rig. But now the back end of our program is rotating towards some of the diamond drilling, and we'll look to chase some of those higher grade shoots that we've had so far. So that's something that we're very excited about.
Did the OTCQX do anything for you with regards to all this trading? Where did all the trading happen yesterday and this morning?
Yeah, the OTCQX has been a good platform for us to ultimately get onto. I mean, I think having exposure to U.S. investors and ultimately be able to have those investors be able in the U.S. be able to access the stock through the various brokerages that they'll have accounts with is something that's very helpful.
And how much did that cost?
In terms of the actual, in terms of the initial listing cost, ongoing cost, it's about $25,000, something like that. I'd have to go back and look at what the exact numbers are. It's been a while since we ran that.
Okay, no, just...
So from that perspective, I mean, anytime we ultimately look at one of these different, opportunities, whether it's listing or working with different marketing groups, and conferences, one of the things we always look at is, what's the potential return on investment of those dollars that we're spending? And when we look at the cost of ultimately listing on the OTCQX and did the analysis of what's the potential return on that investment, we think it's a bit of a no-brainer.
Okay. And if you look at the number of companies at around 1 million ounces in West Africa, gold companies, 1 million ounces, you're 1.4 million ounces. I get it. There's a lot of them. I mean, literally about 100 of them, and you've got to move this company from 1 million to something interesting real quick to stand out from that crowd, because some of them have been cash constrained because of the markets. I think now has been last sort of year has been quite easier for them to raise money, so they're looking to do things. So how do you stand out from the crowd again? Remind me what the plan is.
Well, I think one of the things that this PEA highlights is one way of standing out from the crowd. I mean, and I think the market, as I highlighted at the start, is ultimately recognizing that Nucor and our Enchi project is a project that is differentiated from a lot of the other ones at this stage. And I think the economics of the project speak for themselves. I mean, again, we talked about the value at $1,650 gold. If you look at it from a sensitivity perspective, at $1,850 gold, you're looking at over a $300 million NPV. You're looking at a 54% after-tax IRR and sub 2-year payback period. So with very low capital intensity. One of the things, when I was on the kind of investment banking side that a lot of investors always looked at was, okay, what's your NPV to CapEx ratio? I mean, our initial CapEx on this project is $97 million. And some people go, how can you build a mine for 97? That's one of the key advantages of a heap leach project is, and I've been saying it for months, is that they're low capital intense projects. So you look at that NPV of $302 million relative to a $97 million CapEx, and you're looking at a 3-to-1 ratio. So for every dollar I put in from a CapEx perspective, I'm getting $3 back. That's the kind of thing that's very attractive to investors, and also the low risk nature of the project is another real advantage. One of the things driving that is obviously strip ratio. We've got a very good strip ratio of 2.1 to 1 at our Sium deposit, which is our largest deposit. That drops to 1.3 to 1. So those kind of things ultimately make this project incredibly attractive. The other thing is just from a production profile perspective. Again, we've talked about the exploration and all the upside that there is from an exploration perspective. And we'll be able to ultimately bring those ounces in over time, layer them on top of our existing kind of production profile that we've outlined within this PEA. But if you look at after year one, when we're ramping up, and you look at years 2 through 5, we're producing on average about 104,000 ounces. So very good production profile as well, which ultimately feed the economics of this project as well.
Okay, so when are we going to see all of this drilling come through, and how often are you going to release that information? Just so people see this as a sustained information flow coming through.
Yeah, so I think we've established a very good track record over the last year of being news flow heavy. We know that investors ultimately like to be kept up on what we're doing and how we're pushing the project forward. So we had kind of committed to getting drill results out every 3 or 4 weeks, and that's consistently what we've done over the last year or so. And that's what we'll look to continue to do over the next 45 days as the technical report is being produced. It's difficult to get results out to the market, but once we've obviously got the final technical report released to the market, then I would expect we'll have a slew of drill results and get back to that kind of steady news flow of every 3 or 4 weeks.
But is there going to be more drilling done? Obviously, you've done 22,000 meters. You've got 46,000 to go. Is it at the same rate, or are we going to be upping the game a bit?
It won't quite be at the same rate. So in terms of 46,000, the 46,000 that was not included in the PEA, we've released about 18,000 meters. So kind of a number of the releases you've seen over the last few months are on top of that 20,000. Then we've got another 28,000. Some of the results are in the assay lab. And then there's a bunch of meters that we just haven't drilled yet at all. So that's the news, the additional 28,000, that news flow will start to come out, and we'll put those assays out over the next number of months as we drill the holes. The one thing I'd say from a pace perspective is the front half of our program was all focused on RC drilling, and those RC drill rigs performed incredibly well. We were getting anywhere from kind of 2,500 to 3,500 meters a month of drilling completed. As I'm sure you know, and others listening in know, once you start drilling diamond meters, they are slower meters. So the pace may not be quite the same, but nonetheless, we'll continue to try to get the results out as soon as we've got enough to justify our release.
Okay, fine. So, okay, and you've given us an idea in terms of like stepping out and increasing the scale of the opportunity ahead of you. Are we going to be expecting to see a little bit more of that type of drilling too with the diamond?
Yeah, so I mean, it's a multi-pronged exploration approach. So what I was referring to in terms of the stepping out was at Boeing. And if you go onto our website, you can see some plan maps that really highlight all of that step out drilling that we've done at Boeing. But similarly at Sium, we've done a number of step out holes, as well as following up at Quachikrum and Nyam. So all of our existing deposit areas, it's a systematic approach in terms of stepping out along strike, given the anomalies continue and what we're seeing is the mineralization continues. So yes, we will continue to step out along strike, but then with the diamond rigs, the focus is drilling down dip. So where we've identified some higher grade with the RC drilling, and we've had some very good indications at Nyam, for instance, down at kind of 175, 200 meters, which are the deepest holes ever drilled there. With the RC rig, we encountered 9 meters at 5.4 grams. 7 meters at just under 5.8 grams. So those are the types of results that will now send the diamond rig and look to drill deeper below that higher grade material, and ultimately look to start chasing these higher grade shoots at depth. We've had some nice higher grade indications at Boyne, Sium, Quachikrum as well. So we'll ultimately, systematically target these areas and look to further, get an understanding of the geology, the structure, and then from there continue to prioritize the drilling.
Okay, and so how do you then start rolling those figures into either an upgraded resource or indeed the next study? How do you approach that? You've got 18,000 meters on top of the 22, et cetera, et cetera. So how does that information flow into your ability to actually tell people what the scale of this thing is quicker?
So, the resource update that we included within the PEA, obviously, that's one way of kind of highlighting it to the market. And that's why we'll continue to update resource studies and economic studies as we go. But then, outside of that, where we think we can add a lot of value is ultimately making new discoveries and continuing to make some higher grade discoveries at depth as well. So that becomes difficult to quantify with, let's say at Sium South, if we go and drill 20 holes down there, and that's roughly what we've got planned. We most likely won't have enough data from those 20 holes to be able to, provide a resource at Sium South, for example. But, if we get some good results down there, we prove up what we think geologically is going on down there and start to show that, look, this is mineralized and here are some of the results. And then we, can showcase that, here's another potential area that we can add to the 4 current resource areas. That can start to, highlight to investors in the market that there's, resource growth beyond all of the kind of step out and current resource areas. Arati would be another example of that, which I touched on. We've got 10 historical holes up there. So, we know that there's good mineralization up there, but there just isn't enough drilling to be able to wrap pits around that to ultimately create a resource. So that's part of the reason why we're going back up to Arati now, and we've got a drill program planned up there. And that was similarly the case at Quachikrum. When we started this 66,000 meter program last year, we had 16 historical holes at Quachikrum. We've now followed up with our 2020 drilling. Off the top of my head, I think it was 24 holes additional that we drilled there, plus a few other, I can't remember the number exactly, but we followed up, we proved up an 800 meter mineralized zone. And with that additional drilling, we then had enough, drill results and tight enough spacing to be able to wrap pits around it and come out with a maiden resource as part of this PEA that we just put out. So that's kind of the approach. And, go back to Arati, drill Sium South for the first time ever. Go back to areas like Kojina Hill, which has had some very good results, Tokasia, and, look to start moving those up the pyramid towards the resource area. So it's a multi-pronged approach from an exploration perspective. And that's how we think we'll ultimately create the most value for shareholders.
Yeah, I like that. I like the way that you're approaching that, rather than just trying to kind of pump up one asset and hope people look at the big headline numbers. No, good approach. Great update. Well done on the PA. Some nice numbers there, really nice. And by where you just outlined your plan of attack, I expect to see more information from you more regularly. And I look forward to following this story. Thanks very much, Luke.
Thanks a lot, Matt. Good to see you again.